Meditators, welcome to another episode of the Market Meditations podcast. Today we have with us Alex Thorn, head of research at Galaxy Digital, a crypto-focused fund with 40 billion of assets under custody. So huge. I think you just told me you've got 200 employees as well at Galaxy. So welcome, Alex. Thank you so much for joining us.
Oh, hey, I'm so happy to be here. Really excited.
So I just asked you because most people who are in crypto tend to be, I mean, it's a new industry. A lot of the companies are smaller. A lot of people find ways to go into the space solo and do very, very well for themselves. What's it like working at such a huge company?
Yeah, it's really exciting. It feels like especially when there's volatility in the markets, it feels like you're on the New York Stock Exchange, during the heyday of equity trading, right? Pit trading. It's loud, it's fast, the company's filled with incredibly smart people. Coming back into the office, we're not all back in the office with COVID, but I had worked remotely for a whole year prior to joining Galaxy when I was at Fidelity, and getting back into the office and being surrounded with such intelligent and excited people, all working on crypto and on crypto markets, has been really really exciting.
So, do you think it's just a net positive, or would a lot of people find that excitement stressful or too much to handle?
Yeah, it definitely, it takes a certain personality, I think, to enjoy it. And, but, I think if you're interested in markets, these markets are by far the fastest and most interesting. And so there's no better place to be than a company like Galaxy. It's got, a huge asset management business, a massive trading business, a big investment banking business, a big Bitcoin mining business now, and a lot of like deep venture investments, right? And the people that run these businesses and work on them, we can all collaborate to some extent, and that's a lot of people that have a lot of knowledge about a really big and growing industry, right? So as a researcher in particular, I love that access, right? I get a lot of insights from people who are on the ground in these markets, and that is invaluable as we develop our research content.
So, as a researcher, I'm guessing you're super passionate about diving down different rabbit holes and learning as much as you can. Are the resources one of the most attractive things about being able to work at Galaxy, being able to leverage whatever you want for whatever information you want?
Yeah, and absolutely, there are some walls between parts of our businesses. I want to say, right, that where there's client information, of course, that we don't share with each other, and I don't have access to. But yes, we have a lot of resources, well more than if I'm just an independent crypto researcher. And obviously, we've seen one of the most interesting pieces of decentralization that this space has created is the decentralization of thought leadership, right? And people all over the world that can really make an impact in the conversation by using data and being involved and advancing a lot of our collective thought processes and understandings about this technology and where it's headed. A lot of independent people have done incredible work. I mean, some of the best work in this space has been done by independent analysts, but with but it helps to have a lot of resources, right? To have the people to talk to, the money to get the data we need, right? To build the data products we want to use. That's something we have at Galaxy that we didn't even have at Fidelity, right? It's not, and a lot of people I think don't have, and so yeah, that's a big part of it.
So, would you say Galaxy is disproportionately more? I mean, it's kind of obvious, but probably Galaxy is disproportionately more equipped to handle crypto than, say, Fidelity was. And what sort of key differences are there?
Yeah, I don't want to knock Fidelity. They were early. They're passionate. They know a lot about the space, right? The leadership there in particular, both of the company as a whole. Abigail Johnson has led that initiative herself. This wasn't something that was pitched, by junior folks into crypto up to the top and accepted. This was Abby's interest herself that really got the ball rolling there. But Fidelity has a large other businesses, right? That take priority. Right, crypto is a tiny piece of their organization, so that you can see that impact in terms of things like allocations and just attention paid to that business, right, by the overall organization. Lots of smart people there, but when you're at a company like Galaxy where this is all we do, right, and we do it really big, then there's just a whole different level of speed and attention paid to these markets that you can't really compete honestly like with a company like Galaxy. We're faster, we have more access, we know more people, we know more data about this space, right? So we definitely have an advantage when it comes to understanding and participating in these markets. I mean that's the reason Galaxy's been so successful.
So a common trend I've noticed, like we've had CEOs of some of the best companies in crypto on here and different team members, and all of them always talk about speed being the number one most important thing. Now, is that something unique to crypto or any new emerging industry?
It probably isn't unique to only crypto, but there are parts of this that make crypto very unique in terms of speed. It's global, it's digital, and there's just innovations happening at a rapid pace. We were talking about the time that something goes from discovered niche to like mainstream adoption, and that just seems to keep compressing that amount of time, right? It took Bitcoin maybe 7 or 8 years before mass under like even awareness that it existed, right? And now we went from say CryptoPunks NFTs being sort of a little interesting plaything to worth hundreds of thousands of dollars in a couple months, right? And major celebrities, brands, Visa bought a CryptoPunk, right? So that time is compressing, and so it's definitely faster than I think anything out there right now. The pace of innovation and how fast you need to be to stay on top of it. I think everyone will tell you that, right? I mean, this is something we struggle with even, and we're right in the center of a lot of what's happening. Just on the research team, right? It's like we've got to be watching everything, right? It's you really can't. You can barely take any time off, right? To actually, which is part of the struggle, because some of the stuff we want to write and research requires longer term, thinking and bigger projects, and there's just like things happening at a rapid clip, and so that's one thing our clients appreciate, is that we're able to keep them up to speed, and that's not easy in this space.
It really, really isn't. We run a newsletter, so we know how much like you have to become an expert in whatever you need to become an expert in as quickly as possible, or someone else will. So, what does that process look like? Say, Galaxy Digital, someone notices NFTs are on the up, they're starting to get trending, they need to start learning about them. Like, how do you react to that with such a big company?
Yeah, I mean, luckily again, there's a lot. Basically, everyone here is chipping in that regard, right? Everyone here is at Galaxy is here to work on the crypto markets, right? So we've got a lot of eyes on the markets. That helps. Not everyone works in research, obviously, but a lot of people are out there able to sort of flag when interesting things are happening and help raise them to the discussion for the group. And there's a lot of good collaboration in terms of following markets and trends, right? So that's one thing, is that again, even outside of the research team, we have a lot of people who are following. So it's a lot of eyeballs, right? And that also yields a lot of opinions, a lot of theories, right? And so we get a lot, just the germination and the sort of news digestion and the germination of sort of thought leadership internally is much faster than it might otherwise be, because we have a big pool of people looking at it and commenting on it and wanting to comment on it. When it comes to publishing, this is hard, and this, you run a newsletter too, so like by the time you write something, it literally takes some time to write stuff, and by the time you write it, sometimes it changes. Like, so I run a newsletter from Galaxy, and I ran an internal newsletter at Fidelity for a long time, and like just one simple example is like the crypto prices. I always want to show the prices, right? And you always just have to pick a time, because I finish it writing on a Thursday night to go out Friday morning, and then there's a huge market move overnight. Now I'm like, this thing's totally out of date, right? And that alone, I'm sure you've experienced as well. But it's true for even just other research pieces. You take something like El Salvador. We just put out a report today about Bitcoin adoption in El Salvador, and we had written that the president, Nayib Bukele, had announced that he had bought 200 Bitcoin on Twitter, which he had. Before we finished writing it, he had announced that he had bought 200 more Bitcoins, and I would go back and change, right? And so we're still following it. We're trying to, reports are often sort of frozen in time, and I do want to get to a place, by the way, no one's really doing this, but where our reports are microsites and they live online and the charts are constantly updated. That's a goal for me, and I think that'd be really cool, much more befitting for a space like this. But they're frozen in time, right? So we have to at some point take these insights, whether it's like on NFTs or something that's happening that, first it gets bubbled up, it gets batted around, we sort of agree on what we think our viewpoint is on it on the research team, and then is it something we should publish? Is it interesting enough to be published? Will our clients want to learn about it? And then timing. Then it's all about timing, right? Then it's all about, when do we write it? Do we write it right now? Do we write it and then update it, right? Like, and that's the constant game with publishing, particularly like in a market, right? We're not writing blogs about birds or something. This the market moves, so like we have to, right? We want to make sure that what we say is useful and interesting in the context of a rapidly moving marketplace, and that is hard.
Uh, there's so many things I want to expand upon there. I'll start with one which caught my curiosity, and I think people would benefit from. When you said, "Will our clients find this interesting?" Is there an internal checklist? What filters do you take something through to see if clients will be interested in it?
Well, we talk to clients, and in our client facing people talk to their clients every day, so we hear about what they're asking. They ask questions of Galaxy all the time that we, as that Galaxy replies to, that sometimes we on the research team assist and come in and also offer thoughts on. And that's the big part of it, right? There's client feedback, and so this isn't, we're not just blasting this stuff out into the proverbial ether, right? We wait, and we get feedback, so we know what our clients are interested in, right?
So there's so many unique skills required to be head of research at Galaxy, and you've managed to get there, and I imagine it's extremely competitive. We've got a lot of traders and investors who listen to this podcast, and they've got to do a lot of research themselves to dive into the markets and learn about it. What separates you, do you think, from everyone else who wants to have been head of research at Galaxy Digital? What makes you so good at the job?
That's a good question. I'm still trying to find out the answer to that question every day. Look, I took a pretty circuitous route to get here. I started as a paralegal in my early career. I studied political science in college. I later did technical investigations, so it's computer forensics, right? But I had gotten interested in Bitcoin back in 2012 or so, back when the Euromaidan protests were happening, and just after the Arab Spring. And I've been on the internet like in a deeper way than most for a long time, and file sharing and IRC, and been interested in encryption. So when Fidelity had started looking into this, back in 2015, it was found that I was one of the most advanced Bitcoiners at the company, and I wasn't working on it, right? And so I was working with them a little bit and consulting, and then I said, wow, we have a Bitcoin department now, essentially. I should really go try to work there. And I did try, and I did get hired to run research there. And it was really, honestly, this is advice I give to people all the time, particularly if you work at like a big company, that, for example, could be interested in operating in this space, which many are now, right? You don't have to be Galaxy to have people working on crypto at your company. Pretty much every big company has someone looking at this. Is learn about the stuff that's dangerous. Learn about the things that could disrupt your company, right? Become an expert in how your company fails. And in the financial services industry, right, crypto potentially poses a significant threat, which is why you've seen financial services companies become among the first adopters of this technology, right? Because has been to date primarily a monetary networks and sort of financial protocols, and that was true at Fidelity. So I do bring a background. I worked in legal and compliance, right? I studied. I worked in Fidelity's capital markets group, covering doing regulatory investigations. I have technical background, meaning computer. In my case, computer forensics, not even computer science, but that all adds up to help. And then just following this for so long, someone was asking me like, how long does it take for an analyst to sort of really get there and really feel confident knowing the space, and feeling confident talking about it in a way that where are they? How long does it take to get over that first hump in the curve of enlightenment and start rising, go down the trough of disillusionment and come back up? And honestly, I've seen it take maybe an average of 3 or 4 years of people who have watched it closely, really not feeling like they really get it until for that long. Look, some people can move faster and some people maybe are slower or never get there at all. But it's just a lot. There's a lot. It's a multidisciplinary space, right? You've got to understand, at least understand computer science principles. You've got to understand how game theory and incentive design can work. So you've got to have some political understanding, and then obviously there's economics and history is important here. And there's, if you're a trader, then there's markets and finance can be really important, right? So to really like talk about this, and I've just been doing it a long time, and for the I don't think I'm special. I'm just further along than most in that curve, that enlightenment curve here. I like to think.
Well, I appreciate the humbleness, but you're definitely very talented at what you do, and the fact that you've been able to develop a sufficient level of expertise in so many different areas in order to be specialized in where you are. And I'm guessing that just stems from natural curiosity. You see something, you're interested, it's to do with Bitcoin, you dive in and
Yeah.
you learn as much as you need to.
It's all about curiosity. It is all about curiosity. I mean, that's always been that. You're right. That is the sort of the trend throughout all of these different things that I've done to just end up where I am. I was a news junkie. I was a foreign policy buff. I was obsessed with foreign policy. It was right. That's how I mean, I was following the protests in the Ukraine. People were asking for Bitcoin. I was like, what is that? Right. Like that's kind of how I started looking into it. Right. So curiosity is the most important thing. Absolutely for research.
Yeah, it definitely makes sense that it is. No, the you said the 3 year time period, and I was thinking back on my own experience of like how long it took me to really feel in tune with the market, and that 3 year point really is, there's something special about it because you've normally experienced two cycles, and I use the word experience very deliberately. There's a difference between understanding something and actually experiencing it and going through it and knowing the subtle cues to pick up next time and the specific levers that need to turn for stuff to happen. What sort of things do you have that you've experienced like that? Key things which really stand out to you that you think are cool, unique insights?
Ooh, man. Yeah. Over. Gosh, there's a lot. I mean, there's been a lot of hacks. There were things like obviously you have the ICO boom was really instructive. I think a lot of people learned a lot about what the space could be, and then also what how to be. How do I say this? How the negatives, right? I mean, sort of spotting, like separating the wheat from the chaff, figuring out what's real and what's hype. I think that was really instructive for a lot of people in 2017, because prior to that bull run, there was Bitcoin, and then there was a niche group of other stuff, right? And obviously, we can go back further. There was Litecoins, there was Namecoin, even, right? There was but that no one, the innovation was relatively minimal, and the awareness was near zero. It was that boom sort of in 2017 of interest that led to the creation of all these tokens on Ethereum, that it did many things. It showed that the Ethereum platform can be used for creating assets, which that is a powerful, long-lasting innovation, right? But it also showed that all these people had just learned about blockchain and said, "Oh, what can this do for me?" Right? Oh, we can put this on a chain. We'll have a blockchain that tracks like tomatoes, and we'll have a blockchain that's like for it's like, letting
For
do bills
dentists.
of lading. Yeah, a dentist chain, exactly, Denticoin, right? And that didn't sound crazy to everyone right away, right? At first, we were like, "Huh," right? The market had to go through that experience of basically being like way overly jubilant and allowing these absurd ideas to quote unquote, at least I don't even want to say be attempted. Many of them didn't ultimately even get attempted, but allowing these absurd experiments to be proposed before we realized that so many of these are stupid, and we sort of realized we had to overshoot in order to like get back to like what is the real core innovation in this space, which I think many agreed was digital scarcity and something like Bitcoin, and then even more recently, it took several more years, I think, for people to really agree that something like a smart contracting platform is super valuable, right? And has uses outside of, unregistered securities offerings from the ICO era, right? And it does, right? And so now I sort of view that market as, I sort of view the market as Bitcoin as the most decentralized and sort of canonical ledger, and whose goal, whose primary feature is its distribution, right? Which makes sense for its use case, which is to be the hardest money, right? The soundest money, the most decentralized money, right? That makes sense. So its primary sort of design goal is decentralization. But then other people said we want to do other stuff other than just money, right? And so we have to compromise a little bit on decentralization in order to get those other features. And I really view Ethereum as like really having cornered the market now on that first leap, right? And that everything else we see from the coins are just sort of iterations, sort of competing with Ethereum. A little less decentralization, a little more throughput, a little, less security, a little more, composability, right? Like it's the same. So you have sort of Bitcoin in my mind, Bitcoin, Ethereum, and then a long tail of Ethereum challengers is pretty much how I think the state of the market looks today. It may not always look like that, but I do think, back to your original question, Karush, that 2017 cycle was very important. We learned a lot about how the space works, how it's going to evolve, what are sort of guide rails for absurd behavior versus legitimate innovation. I mean, people really just didn't know. There were a lot of people who did know, I should point out. Many people were critical of the ICOs. I'm not saying they weren't, right? But sort of as a collective mind and a collective market, it took that sort of excess, I think, in order to just display that it was excess in the first place.
Well, I'm taking everything you just said in right now, and so what specifically am I looking for to spot what is an innovation and what is just fluff? Now, I want to present an example. Right now, I'm fascinated by NFT play to earn gaming. I think it's really cool, and I think the effect it could have on the world is pretty crazy, but I also think it's going absolutely wild. Projects that are just roadmaps are getting valued at $600 million, and it's a video game. Video games are very hard to make. Video games often tend to suck. And also, it's such a new concept that I have no idea how someone's actually going to execute it effectively. So
I think there's absolutely real innovation there with NFTs. I think how to separate the innovation from the fluff. I think one is you really have to dig into fundamentals and adoption metrics. I mean, whatever you can find to show that people are actually using these things, right? And particularly, is it people that are in sort of the mainstream society, or is it a group of crypto rich people passing money around with each other? That's one thing that's been super interesting about NFTs, the digital collectible art NFTs, let's say, because I think when we say NFTs today, most people think we're talking about these digital collectibles and digital artwork, but of course the concept is much broader than that. We see celebrities. Jay-Z owns a CryptoPunk. Visa bought a CryptoPunk, right? We see a lot of ownership of it. There's tons of athletes and mainstream people. Brands are interested in digital collectibles. To me, that does show or at least that's the first signs. We'll say it's real adoption. Now, there are limitations to that. Many of these things are too expensive. Not everyone can own a CryptoPunk. Even just gas on Ethereum today is so expensive that it's going to cost you several $100s just to do a transaction, right? So that alone is going to price out most of the world and whether they can participate in this market. So it's still in that sense. So in the first sense, you got the brands, the celebrities, a lot of people really interested in digital collectibles. In the other sense, it's still totally inaccessible to the vast majority of people. So this isn't something still that we're talking about that's broken out into everyday usage, right? It's still really speculation by the wealthy, by crypto technological people. But I think you also have to consider, so you've got the adoption, then you got to consider the concept, right? Does it actually make sense? There were a lot of people with Dentacoin, for example, that said, this doesn't make sense, right? That people converge on one money. We don't want to have a different money for every chiropractor and acupuncturist and dentist. That's crazy. You're not going to have acupuncture coin and dentist coin, right? Like the concept was ludicrous, but the concept of something like an NFT, it's just like a contract, right? It's a unique contract. So it's the deed to your house or the title for my car, right? And those exist in the world. That's not a crazy concept. There are many unique, you know, deeds of ownership securing the property rights that we have in this world. So if the concept is can they be digital, I think that concept is very possible. In fact, many of them are digital. Let's just get them on the same digital standard, right? So that we can use them, we can move them around, we can store them in our cryptographic, key signing devices, right? We've got that. That's the thing that so for NFTs, I think this makes complete sense. Now, are we in, people buying pictures of like, a black square or like, right, buying JPEGs that for games that haven't been built yet or whatever else, right? Like, it's hard to look at that and not think there's a lot of hype driving this market right now, so it's very possible we're going to overshoot a bit. But I think unlike the ICO, the NFT boom I think has some real meat behind it. It definitely has legitimate innovation. We're looking for things like, can we put remember there was all these years people wanted to put property on the blockchain, real estate. They want to put real estate on the blockchain. They want to do securities, right? Securities tokens, right? We really still haven't seen that happen yet. But now it does seem like, look, we've got a use case for tokenization that people want, right? They want it. I really see two primarily, by the way, that we've really seen succeed for tokenization. One of them fungible and one of them now non-fungible, which is stablecoins and digital collectibles, right? And stablecoins are tokenized dollars by definition, and they are widely used, and that works. That is taking something physical, quote unquote, USD cash, putting it in a bank account or doing something with it, right? And then representing it on chain with a token, and that is tokenization. And that was, I think, the first real use case that really took off. And now I think NFTs and digital collectibles are showing that we can have a good first proof of concept for non-fungible tokens, right? So in that sense, there's very real stuff happening here.
Yeah, that's a very interesting comparison as well that you say the NFTs specifically, and we've seen the stable coins work really well as like bringing real world stuff onto on chain. Stable coins in particular, I was planning on diving on it anyway. This gives a perfect route for us to go into it. Are you actually though? So it represents a US dollar, but there's so much uncertainty around coins like USDT. USDC used to have a great reputation. Now people say even that might not be fully backed. Where do you stand on the security of stablecoins, the future of them, and their current role right now?
Yeah, great question. Look, there's a lot of opacity in this market. It's not as transparent as we would like to see. I think that's been the reason you see a lot of regulators, asking for more transparency and a lot of controversy around these coins. But look, I mean, whether something, to be clear, my view has always been whether something is 100% backed by cash shouldn't really be the standard. That's not how banks work. Obviously, banks have deposit insurance to help buffer the fact that they don't have all that cash, right? But 100% reserves, almost nothing in finance is 100% backed. There's also no business model to run a stable coin if you can't do anything with the money, right? But we also don't want our a stable coin provider doing risky stuff with the reserves that are supposed to be backing this coin, right? So I think we're going to see more transparency from these issuers in general. We already have seen more this year than we've ever seen, right? I mean, these ongoing attestations now from all these companies, that's new. That's new basically in the last 6 to 12 months. I think whether because of competition or market demand or regulation, we will see significantly more transparency. But I do think that privately issued stablecoins, if we call them that, right? As in not central bank digital currencies, they are a major innovation. I don't think from what I've heard on the CBDC in the U.S., it doesn't sound super interesting to me, right? It doesn't seem like the Fed is going to give a digital wallet to every American citizen and we'll all have an account directly with the Fed. That would be interesting, right? That would be, wow, that's a major change. That's a significant innovation in how we deal with money. The Fed chairman, Jerome Powell, has said that he wants to maintain the two-tiered banking system, meaning the central bank and then the commercial banks. And so that doesn't seem like you're going to then disintermediate the commercial banks by giving us all access directly to the Fed. In which case, to me, whatever comes out there is some kind of back office tech upgrade that's maybe helps the banks like move money around faster or something, but is basically invisible to 99.9% of the population. So I think that doesn't seem super interesting to me. It doesn't a future where that has happened doesn't seem to be very much different, in my opinion, than where we are today. Right? It's just the further digitization of the U.S. dollar, which is mostly digital already, particularly as it relates to the Fed dealing with its counterparties. Right? It's already basically digital. So, but stablecoins, on the other hand, I think we've already seen a lot of innovation on this. The private markets have been leading the way on this, and I think if we could maybe get to a more open standard would be interesting, whether that's better transparency generally across the board, or if even some kind of open and accessible stablecoin that can where we can mint it, and where like at least certain parties can, more parties than simply one party can participate in the creates and redeems, and the minting and managing of the supply. That could be very interesting in particular. And look, they're super important for crypto markets. That's still true. I don't think there's any kind of like existential threat. Most of the buyers in the US, institutions included, they're not using Tether, for example, to buy Bitcoin, right? They don't need to. They have plenty of access, right? I think we've seen mostly we've seen a lot of usage of Tether overseas, where access to the dollar and banking for crypto companies and investors is limited. And then we've seen a lot of USDC's use in DeFi. Tons of USDC and DeFi. Some of the biggest pools are all USDC denominated, right? So those are two different use cases, and they're both very interesting, and they both are big. And we'll see what else we can use it for. With El Salvador, they didn't adopt Tether as the standard, or USDC. They added Bitcoin as a legal tender. So that's another part of, when you think about stable coins, a lot of people said stable coins will be used for payments. We don't really see that much today. There's some evidence of it, but and then people say, well, no one uses Bitcoin for payments. I know that's not true. I hope to publish something to show that, but billions of dollars have been spent every quarter for years by people through companies that we can track just by looking at companies like BitPay and OpenNode and coin payments that do these payments like for merchants, right? But what will be used as money? That's the question. And the dollar is ubiquitous today worldwide. Stable coins can enhance the dollar's power. And so I think, especially when you look at it, you look at the design choices made in China with the digital yuan versus how our markets are evolving, right? If there's a threat from the digital yuan, people backing the dollar, the central bank, the government should be looking for a way to innovate that dollar. And I see a lot more innovation on this sort of private stablecoin front than I do at the CBDC level. But last thing I'll say is we have to wait and see. There is a report that's forthcoming from the Boston Fed on this, so we'll get more information hopefully in the next month or two about what they're actually thinking for a digital dollar. That's a long answer.
They all are, and it's such a pleasure to talk to you, because you're clearly so immersed in the space, so excited, and you just want to share thought after idea, and you continually expand in different directions. Makes it difficult for me to choose where to continue the conversation on, but no, not at all. It's great. And so to start with, I definitely see the initial path you suggested, where the dollar's just digitized. There's no innovation there. It doesn't really help much at all. I agree with you from obviously my less qualified opinion than yours. Now, you mentioned that institutional buyers aren't really using USDT. Does that mean Galaxy Digital don't really need to consider risks of potentially USDT or USDC? And how do you personally view the risks of USDT and USDC? Personally, I just split 50-50 between the two.
Yeah, no, Galaxy's involved in basically all these types of markets. So there are, but what I really mean is that you take like Paul Tudor Jones, who famously wrote this really eloquent note back in May of 2020 to his clients, arguing that Bitcoin, if the gold trade works in the face of this unprecedented monetary policy, then the Bitcoin trade should work better, right? And that really set off the institutional digital gold, Bitcoin as digital gold thesis, right? That he was sort of he really kicked that off. Those buyers can access dollars, right? So they're coming through the doors at Galaxy, with dollars, right? A lot of the Tether usage has been in places where it's hard to get dollars, right? Or it's been, and this was true from the beginning, right? I mean, Tether was this on ramp for a crypto industry. The industry itself was largely unbanked, right? USDC doesn't have as much of that problem because they're onshore. They're but it's largely, as far as I can tell, a very similar structure to USDC, just with perhaps an American auditor doing the attestation, an American bank custodying the right, and until just very recently, they had a similar reserve makeup, right? They also were investing portions of the reserve. It wasn't just sitting there in cash, right? So honestly, I think they're. I don't really view the risks that differently, in my view, at this time. I mean, it's hard not to. So many people are asking me, Alex, how can you not be, so worried about Tether, right? And I'm like, as far as I can tell, like the peg is holding, the market isn't worried about it. Outside observers have been worried for a long time. Do I want more transparency? Absolutely, yes, right? I mean, I think we always want more, especially me. I'm a researcher. I want to see all the information, right? So, but, I think ultimately, I also don't hold a lot of dollars on chain. I mean, I just don't, right? In general, let me put it this way. Here's a way I can answer this question. I like native crypto assets. I want Bitcoin, right? I want to trust Bitcoin. I know how it's secured, right? It's secured by the blockchain, the time chain, Satoshi's chain, right? I know how that works. I don't have to rely on a bank or a regulator, like, saying the way it's collateralized isn't sufficient, or like, some jurisdiction changing the rules or any of that, the way you do with anything that's tokenized, right? Represents an off-chain value. So in that sense, stablecoins are risky, right? Because the regulatory landscape is shifting. You'd almost be better off holding dollars if you can, right? And I think many do. I think let's just hope we can get to either dollars on chain so we can do this fun stuff we're doing on chain, or we get the on chain dollars to be better over time.
What could potentially go wrong with, say, USDT or USDC? Because you're saying actual dollars are better. What scenarios are they better in?
Well, I mean, I'll tell you what the regulators say, right? That dollars in a bank account are backed by the federal, have some insurance provided by the FDIC, right? Up to a certain amount. We don't know if we have that with, in fact, we almost certainly do not have that with tokenized dollars, right? So that alone, right? And look, whether due to mismanagement or mistake or regulatory attack or something could happen to these centralized companies issuing these dollars and these stablecoin dollars, and that all of a sudden you've got an IOU, because you really have an IOU from an issuer. You don't have a real dollar, right? And we could debate on, like, how valuable and secure is a real dollar, but like it's definitely more secure than an IOU from a company of any kind, offshore or onshore. So I mean, that to me, that's the difference.
And what prompted you to, for example, dive into stablecoin flows recently? Like, what drew your interest there?
Yeah, well, one was we were getting asked by a lot of clients about these coins, right? And about Tether in particular, and the whole issue with the reserve makeup, and also I will say the sort of fundamentals. I mean, they're up. The supply of these coins is up dramatically. I mean, I'm looking at the chart now, 25 billion to over 100 billion just this year. But that, if we look 2020 January, go back another year, it's like a couple billion, right? It's up 100x in supply. So the usage of these things has exploded. And so it's hard to ignore that. And it's, and stable coins are a really important part of the market structure in crypto, right? It's like I said, they are used significantly for on-ramping, and coming in and out of different trading positions. Back in 2017, almost every trading pair was denominated against Bitcoin on these exchanges. Now almost every trading pair is denominated against a stablecoin, right? So they're an important part of the market structure to understand better. And there's a lot happening, right? There's regulatory, take Facebook's Libra, or the Libra Association's DM coin, right? And remember, a couple of years ago, this raised a massive, consternation of lawmakers and regulators around the world. So that brought a ton of attention to it. And right, so there's a lot of reason to focus on these things. I think just most recently it was the rise, and it was, sort of changes in the way these things, the changes in the transparency level, right? They've become more transparent this year. These attestations with reserve makeup breakdowns that we didn't used to get that, so that's gives you new lines of thinking and lines of inquiry to look into, and so you can't help but not.
Yeah, of course. And why do you think these are finally happening now? Like, what reason is there to have not released this information 1 year ago versus now? Are they waiting for better circumstances till the reality is a bit better before sharing information?
Well, Tether was required to do so based on part of their settlement with the New York Attorney General. But I think there's also market competition, right? USDC grew enormously. A year ago just in January of this year, I don't have I'm looking at a sort of a stack chart, but let's call it a couple billion for USDC compared to 20 billion for Tether. Now USDC is, tens of billions. So, and Tether's dominance, quote unquote, over the stable coin market has declined. So increased competition is breeding additional transparency, I would argue, which is good.
Great for the market. And it's actually nice to circle back to what you were saying about potential Ethereum competitors. I'm sure your clients are interested. It's something our listeners are always interested in as well. We've got things like Solana coming in where they're trading a little bit of that decentralization for higher speed. Do you think Ethereum is going to lose its market share, especially with the NFT craze right now, the fees going out of control? What are your thoughts on that sector of the market right now?
Yeah, it's a really good question. I don't know. The answer is I don't know. I do think that it is Ethereum's being challenged. I think the Ethereum community finds itself in a bit of the innovator's dilemma, where they sort of have to innovate faster than their competition finds distribution, meaning that particularly on fees and scaling, that's I think what has pushed the high fees on Ethereum. The costliness of that block space has pushed people to use cheaper block space. Finance Smart Chain, Solana, even Avalanche. These things may also themselves fill up one day, right? So it's more about the demand spilling over into these other protocols, but then these protocols actually having some stuff for you to do on them. That's another thing that's different, right? It used to be really, it was mostly Bitcoin. Okay, then you could issue tokens on ETH. That was interesting and new. Okay, then you could do DeFi on ETH and maybe like tokens on one or two other chains. And now it's like, okay, now you can do DeFi on ETH and a couple other chains, right? So I think that the run up in the recent sort of alternative smart contracting platforms that we've seen has been spillover from significant demand, which is positive for the whole space. But Ethereum sort of not being able to deal with that demand without in a way that keeps fees inexpensive enough for the average user, and so people are sort of trickling out for different use cases further down the line. So to that innovator's dilemma, I mean, if Ethereum can scale, if it can, whether that's through sort of layers, roll ups, even side chains, or whether Ethereum 2.0 sort of does come and does provide a lot more throughput. If then I think the prospects for perhaps some of these other L1 chains are diminished. But that stuff isn't really here yet today, and the demand is here today. So that's why we're seeing, I think, folks now. I don't think Ethereum will be displaced for smart contracting. It's sort of like, but how many of these chains do we need in the world, right? We've been debating this a lot. If we say we know we're in a multi-chain present, right? We know that people use Bitcoin for what they use Bitcoin for. They use Ethereum for what they use Ethereum for. And now there's at least a couple others that are getting pretty notable, significant usage today, right? The question is how many chains exist in the future, and I think that really is determined by how well the existing incumbents like Ethereum can scale, particularly through a layered approach. If they can, then maybe the answer is there's only 4 or 5 chains that really matter, right? We can spin up another one over and over again. There were tons of different networking protocols that ended up not being used when the internet was coming of age, right? Like, so it's hard to know, but I think it is hard. I don't think, I think Ethereum is probably just like Bitcoin's the canonical ledger, the hardest ledger. I mean, Ethereum's ICO is documented on Bitcoin, right? It was largely bought that ICO with Bitcoin, right? It's the canonical Satoshi's chain. It will always have that value. It's also the hardest. It's probably the most decentralized, almost certainly the most decentralized chain, right? But if you want those additional features, like you go one step down on the decentralization rung, you get to Ethereum. And, can Ethereum, I think there could probably be a few others. Solana is getting heavy usage, right? And it's highly performant. But, how many of those others? I don't know.
It's interesting to hear you give the answer, I don't know, because I think it's really important for investors and traders to recognize a situation where the best answer to give is I don't know. And despite you saying that, you've got hypotheses, theories formed on how you think this is going to play out. Generally, when forming a thesis on the market, how do you flip from this is probably going to happen to this is a high enough probability for me to give an opinion on it?
Yeah, you got to get a bunch of data points, right? You want to talk to as many people as you can. You want to hear the best arguments against your thesis always. In fact, I used to say, and many of I didn't use I said this I guess plenty, but it was said to me by someone who I really respect and I loved. I used to do collegiate debate, and it was if you can't make your opponent's argument better than them, then you really aren't there yet in your own argument, right? You've got to be able to not be dogmatic about your point of view and instead really, really dive into the other side and sort of try to knock down your argument. And when you can't think of any other good arguments against your thesis, then you might have a strong thesis. I mean, that's sort of the approach that I take, right? Say, here's my thesis. First, literally throw on a page all the simple arguments against it and see how they stack up, what my responses might be, and then test it. Go and ask people, right? Float that thesis. This is what happens. Why I love going to these podcasts. I get people now that come back to me and say, "I heard you say this thing, like I view it differently," and that's great. I don't know, I don't know everything by any stretch of the imagination. So it's a lot of it is by discussion. That's what I love about Galaxy is there's a lot of people at Galaxy to have those discussions with. So we're able to, I think, iterate on these theses and ideas, faster because it can be done. You don't need to be a genius to, debate with people, but you got to have the debates out.
Oh, of course. You have to just not have an ego and be able to accept that things aren't always black and white. There's always somewhere in gray, and you get the data points in to determine where you're going to be on that spectrum. Just with and the time has flown during this podcast. Alex, for just to end on a bit of a fun note, what's the worst thesis you've ever come up with in all your years of crypto that was just completely disproven?
Wow, yeah, we were. Well, I will say, I spent back when I did venture investing at Fidelity in the crypto space. We this. I wish I had a worse one right off the top of my head, but just maybe there probably is a worse one than this, but this is the one that's really just coming forward to share, which is the tokenized equity, right? The sort of the security tokens thesis, right? This was huge in 2018, 2019. We used to joke that we I think we had met with 30 plus companies that were token issuance platforms. And I don't want to say the names of any of these companies, but it's all the ones we all remember, I think, from 2017 and 18, and many more. I mean, gosh, there were way more than I expected. There was a huge boom of these companies. And we used to joke that there were more token issuance platforms than there were token issuances, right? Security token issuances. And that was true. That was literally true. There were like 30, or we met like 30 or 40 of these companies over a year and a half, and basically made no investments, thankfully, because we just couldn't. It never made sense to us. We couldn't we had this sort of bullish thesis. If you look at securities markets in general, there's a lot of intermediaries. It's very centralized, and that seemed ripe for disruption by a decentralized, you know, ledger technology, something like that. So we met with all of those companies, and just nothing, nothing has panned out. Still, there's plenty of tokenization happening, but it's not happening in securities and equities, really. Not yet, at least. So maybe who knows? I'm not willing to close the door completely on that part of the thesis, but we're gonna have to wait and see. It certainly hasn't materialized yet. So that I don't know. I probably have worse ones. I'm gonna have to think. That's a really good question. I'm gonna have to follow up with you on that.
Yeah, definitely send me a DM on it because I just find it fascinating myself. Alex, what's coming out that people should be excited for? Where can people find you if they're looking for you? There'll be links in the description below, but it's always nice to say.
Yeah, I appreciate it. You can find me on Twitter. I'm at Intangible Coins on Twitter, and you can follow Galaxy Research there. It's GLXY Research on Twitter. Our research is also available on galaxydigital.io, so head over there. We don't put everything up there, but we put a decent amount. We've got a bunch of really fun stuff happening. So we're building out this research function still. So this could change, and I can't talk about a lot of what we're building yet, but it's growing quickly. Some content that you'll be seeing from us soon. We have a really good report coming out, sort of measuring and discussing the levels of decentralization of different layer one protocols, and to help, I think, the market understand some of the trade-offs that and design decisions that some of these protocols have made in order to get the features they want. That will be really exciting. We've got another report on layer two, an overview of the different types of layer two networks being built on Bitcoin and Ethereum. State channels, roll-ups, plasmas, even side chains. We'll be throwing some discussion about those. And we have a big report coming out on NFTs. And what I'm really excited about in that report is that nobody has done the level of data analysis that we're going to do for NFTs. For example, the few websites that are showing a market cap for an NFT collection are typically just multiplying the floor price by the size of the collection. So if the floor price of CryptoPunks is 1 ETH, then there's 10,000 in the collection, so the market cap is 10,000 ETH, right? We're taking a different approach to that, and we're going to propose some new metrics for how to sort of collectively value NFTs and therefore the whole digital collectible market. That will be really exciting. I think people will be really into. More stuff coming after that too, but those are right on the near horizon, so look out for it.
Well, I'm already excited for that NFT report. I'm going to try get a few more sneak peek details right after this podcast because we've been diving into that space and right now use Nansen for analytics. But if you're saying there are better ways, then I'd love to learn more about it. Alex, this has been such an enjoyable episode. Time has flown by. You're so passionate about the space. You have such great, interesting opinions. Thank you for taking the time out for joining us, meditators. That's everything from us for this episode. See you next time.